Greetings traders, this recording is September 12, 2010. Today's video tip, we're going to discuss the law of pivots. As we know from Wednesday workshop number 1 on pivots, pivots are the basic building blocks of market structure. They are effectively the DNA of trend development. So we need to understand pivots, we need to understand their meaning, so we can have high confidence when pivots develop to take low risk, high profitable opportunities. Okay, so let's go right into it here. The law of pivots. Number 1, pivots are turning points which mark supply or demand. Okay, pivots are assumed to be valid until they are broken. So prior demand pivot, once broken, becomes potential future supply pivot. And the prior supply pivot, once broken, becomes potential future demand pivot. Okay, very straightforward, very simple. Alright. This chart is a 1500 tick chart. It's one of our proxy market structure charts that we use in the trading room on a daily basis. We also look at a 125 range chart as well as a 5-minute chart, and some of the higher degree charts, 15-minute chart and such. So we want to identify key pivot levels, key support levels, key supply levels, okay, key demand levels. Alright, and pivots allow us to do that. Alright, so what I'm going to do here is just go through this chart here and identify the key pivots and watch how they build structure. Okay. One thing you want to keep in mind for those using a 1500 tick chart is I have a 55 EMA on here and a 13 EMA. Alright, the 55 EMA gives me a proxy for overall trend condition, coupled with the DMI ratio shown in the lower window. And what the DMI ratio is it shows who's in control, who's dominant in the market, bulls or bears. Okay, so above 0, blue histogram, alright, tells us that the bulls at that point in time are in control, and red histogram below 0 tell us that the bears are in control. So we use that in conjunction with price to give us an overall picture of the development of price action. Okay, so let's just go right into it. You'll see here this green box represents the demand pivot zone, okay, i.e. support, right, at the 1038, 1039 zone. And as you can see, as price was coming down here, the price had been in a downtrend and then started finding support or basing around the 1038, 1039s. And each time price came down and retested prior pivot, buyers responded, halted the downward progression at the time, okay, then ultimately worked price higher. Okay, so first and foremost, we want to find areas of support and resistance, key levels for demand, key levels for supply. Okay, the pivots will allow us to do that. Here you see a new swing high created, okay, and then price pulled back to the prior pivot, into the pivot zone. The more times a pivot zone is tested, the more valid that zone becomes. What this new swing high suggested at the time was that the buyers were probing to see how much overhead supply there was at this prior level here. All right, and when they determined that there wasn't a whole lot of supply, okay, they became more aggressive on any subsequent pullbacks, okay, and tried to buy as much as possible. So when price came down and retested the zone for a second time, Okay, there wasn't ample supply, and so the buyers got much more aggressive and started bidding price up. Okay, and once we took out this swing high here, okay, price was now assumed to be up, and we will be looking to buy all subsequent pullbacks. In support of that, we had the DMI ratio showing us that it was above zero, blue histogram, and that suggests that now the buyers are in control. They are dominant force in the market right now. Okay, so let's just move on here. New swing high. Okay, subsequent pullback. Now, one of the rules I like to use with a 1500 tick chart is with a 55 EMA is the following. Again, this is in conjunction with the DMI ratio. Is if price is greater than the 55 EMA, so having made a new swing high, price is above the 55 EMA, and the DMI ratio is above zero in blue, okay, then the action is assumed to be bullish, and I'd be looking to buy pullbacks at or near the 55 EMA at the completion of a pivot, all right, or at a prior pivot zone. Okay, so let's just demonstrate here. We saw earlier that we had the demand zone down here. We made a new swing high. Okay, so we pulled back and held that at the demand zone, subsequently pushed up and made another new swing high. So on any subsequent pullbacks, okay, this prior swing high now, okay, becomes an interested level, all right, for support to come in. So prior pivot highs, all right, or prior supply pivots become future demand pivots. Okay, and notice we found support in that zone. So at the 55 and or prior pivot zone is an area always to consider looking for a low risk trade opportunity. Okay, let's just move on. These arrows that you see on here also show levels where entries could have been made on a low risk basis. I won't go into the entries or the individual trade setups, but just keep that in mind when you're looking at the charts here. So this prior supply pivot, okay, once broken, as it's shown here, becomes a demand pivot or a demand level. Okay, and so price held above that. Okay, continuing on, price again makes a new swing high up here. All right, and subsequent deeper pullback found demand once again at the prior level. Again, also at the 55 EMA, and where the DMI came back down to the zero line and hooked back up, as you can see here. So the dominant force remains the bulls, okay, even on pullbacks. Okay, so long as structure's not broken, as long as that demand line, that demand zone, okay, or demand pivot, all right, all synonymous, holds, we'd be looking for further up. Okay, and as you can see here, this blue box denoted an opportunity for going along. Now this is the Globex session. Okay, most everybody doesn't trade Globex session, but I included it to show you that structure, regardless of Globex or day session, it doesn't really matter, it's intact. Prior pivot resistance here, okay, becomes pivot support. So once broken, okay, as you saw here, all right, making a new swing high up in the Globex, pulling back, finds support at the prior pivot level. All right, also as you can see once again on this structure chart above the 55 EMA, and you'd be looking to take longs at the completion of the correction. Okay, near as close as you can to the pivot support zone. Okay, so there are several ways of entering trades, all right, such as the average Joe 4K trade setup. Okay, very good low risk opportunities. All right, so we need to wait for that retracement pivot to be put in place, and then the buyers to re-emerge, and then it is safe then to look for a trade. Okay, continuing on here. Again, made a subsequent high, new swing high, and then a pullback. And notice again, okay, this is where we broke out. This was a pivot zone in here, okay, and we pulled back right to the pivot zone, 55 EMA. Okay, no breaker structure, so we're expecting more up. Okay, so these are the areas that you want to look for trades. Okay, low risk areas in market structure. If market structure is not broken, pivot structure is not broken, you must respect it and go with what the structure suggests. This suggests more up. So we finally broke the progression, we moved up, made a new swing high, and then we pulled back in more of a bull flag type formation here today. In this example, we had a zero line reject on the DMI ratio, i.e. that's very bullish. Okay, so pull back to the 13 EMA. The reason why I use the 13 EMA is because on fast moves up and aggressive moves where they don't actually pull back all the way to the 55 EMA, okay, we want to find a level where approximately, we can expect to have some sort of a pivot put in place. And one of those areas that I found very useful is using the 13 EMA. That's very, very close to the 21 the 21 period battle line on the execution charts that we use in the room. So it's just something to keep in mind if you want to set up your 1500 tick chart that way. Okay. Now this particular day we had economic news release. All right, we don't typically play economic news releases, so many of you were probably caught flat-footed at the time of the release. That is perfectly fine. Don't worry about that. Okay. The key to understanding is the big boys. All right. They apparently anticipated positive economics release on that particular day. All right. Market structure suggested that. Okay, so market structure tells you a lot in the story. All right, it's not the economic release itself; it's leading up to the releases that really make the difference. Okay, and then the responses to them. So, having missed the actual economic release, because most of us in the room pretty much are flat right around the 10 o'clock release period, anyways. But prior to that, we had nice opportunity to be flat, even at so this particular case, so we had a price jammed up pretty significantly on good positive news. That's fine. Does that mean that all the opportunities are lost? No, absolutely not. Okay, so we have to wait for market to settle down, right? Structure to reform, right? Find where a pivot zone is going to be, whether it's pivot high supply or pivot low demand. And as you can see here in this particular day, we found pivot zone demand at higher levels. Okay, so that was still suggestive that the economic news release on that particular day was still being digested and positive from the big institutions. Again, you can just see here the DMI ratio very much bullish and supporting continued higher action. Now, again, the market ebbs and flows, pushes up, pulls back, pushes up, pulls back. So we're looking for those new swing highs, and we're looking for pullbacks to the prior pivot zones. Okay, so here again, pull back into the pivot demand zone, and then we made a minor new swing high, pull back, and we found that the market created a new higher support level here. Okay, so again, that's supportive of higher prices. Okay, and the market takes time to develop. So don't be impatient and just jump on and I'm going to buy them at the highs. Wait, be patient, wait for those pullbacks. Right? You'll have a lower risk profile and a better profit profile as well. New swing high, pullback. Okay, so this minor resistance pivot becomes the new pivot support zone. Okay, so again, the law of pivots apply. Okay. So you'd be wanting to look for an opportunity to buy them back here towards this area. Now, does that mean you just buy them at that level? No, we have our ways of getting in. Okay, you want to wait for further confirmation that there's no more deterioration in price, right? But we do assume that prior pivot levels, right, are valid until broken. You can also see price maintained above the 55 EMA. Okay, new swing high. We had a little divergence here, and we got a subsequent pullback. Now, could have this been tradable on a short? Yes, but we won't go into that at the moment. Just really focusing on the fact that pivot levels, okay, become supply and demand and the validity of them. Okay, so again, this pivot support zone, we came back down, retested it, it was valid. Okay, and then subsequently made another move up. Now here in this case here, now we have a higher pivot supply. Okay, so once we retrace, back up to that level, okay, we're assuming that this pivot high, all right, this is a supply zone. We're assuming that that's going to be valid, because notice we had some negative divergence up at that high. So a retest of that high, we're looking for, all right, that level is, that zone is going to be ample supply. Okay, it's going to be valid until broken. All right, so having perhaps bought some down here, you're looking at the prior level pivot as a target zone. Okay, prior levels are always targets. So is this, you notice here, it's a lower high. Is it a consolidation or reversal? Well, most of the time, they're perhaps going to be, they're assumed to be a consolidations unless the lower pivot level, okay, the lower demand pivot zone gets broken. Okay, now was it a reversal off of this prior high pivot here to pull back down into the zone? Yes, but overall structure was not broken. So this was just a short opportunity to come back to the prior pivot. Perfect opportunity to take a short though. Okay. As you can see here, DMI was also consolidating, and we were holding above this new major support line that I have highlighted. Okay, so we're assumed to be in a sideward range until these prior highs get taken out. Okay, new swing high here, coming off this pullback into pivot. Okay, notice didn't make a new swing high from this hot upper pivot here. So what happens? All right, market wasn't ready to take off. Guess what? Pulls back down, retests the zone again. Okay, again, prior pivots are assumed to valid until broken. All right, well, this pivot low, demand, still valid. Okay, so again, what will we be looking for? Well, if this is valid and it's assumed to be valid, well, I want to break, once I break this progression and make a new swing high from here, okay, then, all right, this is no longer a resistance zone, all right, and I would be looking to buy a subsequent pullback. So here we go to the 13 EMA, okay, very low risk opportunity for potential up, and as you can see, we made a new swing high, so this price suggested more up at this point. Okay, so once we took out this prior swing high, okay, the subsequent deeper pullback to the 55 EMA with positive DMI ratio offered once again an opportunity. Okay, once this corrective progression completed, pivot was put in. All right, price then breaks the progression, all right, and or battle line, and we make a new minor swing up here. Okay, 13 EMA is positive above 55 with positive DMI. We're looking for long entries for still more up opportunity. Okay, so this is just a quick review of pivot structure. All right, didn't go into detail about individual trade setups. Okay, we'll go into those a little bit more in detail on future video tips. Please review the Wednesday workshop number 1 on pivot structure. Okay, and come back and review this video tip, and practice. The more you practice, the more you will start seeing these. All right, it's always good to practice and review charts in the off hours, not during the trading when you have real money on the line. Okay, because it's very difficult to learn at that point in time. So good trading, everybody, and we'll see you at the next video update.